Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. Markets are just getting ready to close for the day. Of course, tomorrow is the last trading day. This is Trending Markets on December 30th, 2015. We had crude oil back under pressure today, and that caused a lot of pressure on the markets as a whole, taking the Dow Jones Industrial Average off at this point about 93 points at 17,627. In terms of the S&P itself and our conditional trade alert that we sent out yesterday, we needed to see the market open up firmly or strongly. That's why it was set as a conditional trade alert. We do have the S&Ps trading off about 14 points on the day, almost 0.75% lower on the day at 20.5850. The low on the day is 53.50 and the high is 75. So we have seen this market slide down pretty consistently throughout the trading day. First chart I really want to take a look at is going to be our S&P. This is a daily chart. We have our 200-day along with our 50-day moving average. Just kind of pull that into alignment. So because we had a lack of follow through today, of course, as I said, our conditional trade alert was not triggered. And the one thing that we can see, and as we look at this market that I find quite interesting, is the fact that we're now again teetering at this 200-day moving average. This is our daily candle here. The stock market's now pretty much at a push for the year. S&P's down slightly on the year, and the close just above the 200-day moving average, but absolutely below the 50-day moving average. So that could be significant. Whether or not it finds support in this particular area, to me, is pretty critical as to what our next move is, because without a question of a doubt, any kind of a large move in this market below this particular level, which of course is that 200-day moving average right in here at around, call it 2055, we could see this market go and retest this area at around 2000. So traders, there's absolutely no doubt, but one of the primary culprits to the recent pressure in the U.S. equities markets has been crude oil under tremendous pressure. And throughout the year, we've seen it trade to a high of roughly $60. Let's go ahead and pull up our monthly chart, but about $60, that's this area right in here that comes in roughly in June of this year and June and July of this year. And if you notice, you get these two stars and a beautiful double star in between a three-river evening star. Green candle, star, red candle. And from there, the market did trade lower. But considering that mid-2014, oil was trading as high as 110 per barrel, we've seen a dramatic decline of almost 2/3 of value in terms of the price of oil. And that's what's absolutely bought and brought this equities markets under pressure. So what are we looking for, and where can we get some sort of an indication? And the one thing that we do see when we look at this long-term oil chart are these series of bottoms right in here that come in just above $30 per ounce. We're trading at about 36. And historically speaking, if we go back in time to the dramatic rise in 2007, 2008, which took $50 barrel oil up to $150 barrel oil and just as dramatically dropped down, well, we don't have that dramatic of a drop this time, but we are certainly right now very, very close, if not almost right there, to those record lows. I've just simply put in a horizontal line matching these two lows here that come in roughly at $33 per ounce. We extend that line over and we match that up with this recent low that we had this month, which is right at around 33. If in fact on a technical basis there is an area for crude oil prices to find support, this would be that area. But that's on a technical basis, because on a fundamental basis, we've got a glut of oil on the market. Demand is slowly growing, but supply has been exponentially growing and therefore putting a glut of oil on the market. As long as those fundamentals are in play, and regardless of these technicals right in here, the market could still head very much lower. But if there was an area for us to look for potential support in crude oil, this would have to be that price point. So traders, we absolutely want to keep our eye on the price of oil and how that affects the U.S. equities markets. We are in a holding pattern at this point. We have no trades on in the Standard & Poor's 500. We're getting close to the end of the year. That's good. Last trading day is tomorrow. So I don't mind being flat over New Year's and then getting really to it at the beginning of the year. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and basically the yearly wrap-up. Bye-bye.